On today's show, 3 questions. Number 1, have you watched the rodeo in Jackson Hole? Number 2, is 55 the new 65? And number 3, are you smart enough to invest in private assets? Welcome to Dennis Money's 2 cents, where we help Dennis navigate all the noise. I'm Matt.
I'm Cody.
And I'm Rabih.
Yeah, you are. And a special show today because we have Cody. I teased this last week. Cody, I don't know if you heard, but we actually teased that you were going to be on the show this week. And yeah, we're super excited because we love highlighting new members of the team. I get asked a lot, like at events or, consult calls, or just even clients will be like, how many people are like on your team? I feel like there's just so many people on our team that people like don't ever really get to know.
Yeah.
So it's really cool to have you on so people can start to see all the people we have here. So welcome to 2 cents.
Thank you.
Of many.
Thanks. Yeah, I'm excited to be here. This will be fun.
And we also need to say, you came up with your own question, and it's a great one. Is 55 the new 65? Rabih, how did you come up with your question?
Shoot, ChatGPT, man.
His personal assistant and side piece, which is ChatGPT, right? Okay, well, let's jump in with ChatGPT titled question, Rabih. How have you watched the rodeo in Jackson Hole? Give us the update. What happened there?
Yep. So with a question from ChatGPT and the content exactly from the Jackson Hole meeting, I'm not introducing any original thought here.
Literally zero work for this. Yeah.
Okay. Actually, it was very interesting. I woke up early for this. I'm just going to put it out there. I woke up early.
What's waking up early for you?
8 a.m.
That's good.
No, it started at 8 a.m. It started at 8 a.m. To listen to the press conference that Jerome Powell, the chair of the Federal Reserve, had. This is different. The Jackson Hole Symposium, the whole Federal Reserve people go to Jackson Hole, Wyoming. They meet for 3 days, right? Wednesday, Thursday, and today, Friday. And on Friday, they come up with a statement. They don't have a press conference afterwards where they ask questions that are tricky. And they do not set the interest rate. Like, there's no decision today. But this is a big indicator for September. The significance of this meeting is that it allows them to compare from one year to another, rather from like one meeting to another. And they can be broader. They can delve into bigger topics. And it was very important because the market is in limbo trying to decide whether September is going to be a cut or not. If we look at probabilities, what the market was pricing, we were at around like a couple of weeks ago, we were around 60% that there's going to be a cut. Last week, we were at 85. This week in the market was actually, if you look at stock prices, out of the ordinary. We've had 5 consecutive days of losses in equities, especially tech, Nvidia, Palantir, reflecting into the S&P 500. 5 consecutive losing days in the S&P 500. This hasn't happened in a couple of months. So it's people were starting to think slowdown is showing up. The guidance of tech companies isn't as strong as it is. This one tick tariff impact of prices is leaving a footprint. So the market was going down, and with that, probability was dropping, and it dropped down to probably like a 75% that there's going to be a cut. And then the Federal Reserve spoke this morning, and they spoke. They were super clear, right? And I will just read you some experts.
Which is not like them usually. It's usually like hedging.
Exactly. They're like, we want to stay in this tactical position where whatever happens, we have an advantage. Like they try to stay very political about the future. And they were very clear and they said, okay, we've had a couple of months where everyone was having their own opinions. Let us set the rule book. Like, this is how we are reading it. And this is going to be our shared common narrative. With that, I do not know if you looked at the charts, but all the losses we've had in the 5 consecutive losing days on the S&P 500 were recovered in 15 minutes. It wasn't like the market is going up. It shot up vertically up just to cover those 5 days of losses. The VIX shot vertically down, which rarely happens. It usually ticks down slow, which I found a very interesting behavior in the markets. We do not react positively this quickly. We usually react slowly. So, and the probability of a cut in September is 90%. I would say it's 100% at this point. But let me read you a little bit of what he said and focus on the language. I'm going to talk about what he said about labor, what he said about inflation, and how he tied both of these together. So you guys ready?
I'm so ready.
Okay.
I've never been more ready. So excited. It's Friday, and this is all I want to talk about.
Okay. This is what he said. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from marked slowing in both supply and demand for workers. This unusual situation suggests that downside risks to employment are rising, and if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. Could it be clearer?
No.
It is so clear, and this actually explains why we were wondering. We are seeing slowdown happening. GDP is slower this year than it was last year, but unemployment didn't really budge, right? We are at the 4%, 4.2% for a while. And now he's saying the reason the unemployment rate is staying slow is because demand for workers is slowing down because GDP is going down, but also the supply of workers is slowing down. And the supply is coming from immigration policy, according to them, and participation rate. So both of them going down at the same time kept the equilibrium position at the same place where it is, which is the constant unemployment rate that we are seeing. But he's saying, if you look at the big picture, this is a downside risk. And something that's interesting is that 2 years ago, unemployment was 3.5%, and now unemployment is 4.2, right? It's almost a 1% increase in unemployment, and usually with unemployment, it's a slippery slope. Once unemployment starts ticking up, it ticks up even further, and suddenly you see it 4.7, 5.2, 6, which is the long-term average. This is one of the very few times, and he made sure to take credit and highlight it, where unemployment ticked up without a recession happening. AKA, I did the soft landing for you people. You are all very welcome.
AKA, I freaking nailed it. Yeah.
So he said that unemployment is telling us that there's more risk that it's going to shoot upwards, and we're really taking that into consideration. Moving on to inflation. And he also was very, very clear, and I really loved, and now it explains why the market was a little bit euphoric about it. This is what he said. The effect of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over the coming months with high uncertainty about the timing and the amount. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case, so this is their base case scenario, is that the effects will be relatively short-lived, one-time shift in the price level. Of course, one time does not mean all at once. I've never heard Jerome Powell this clear before in my life. That's why I'm reacting. It's like you're texting a girl and she starts sending you heart emojis. You know, it's
always comes back to that, Rabih.
I'm just trying to, make a very foreign concept as like a Federal Reserve meeting relatable. That's all I'm trying to do.
Well, it is true. I mean, every time we've talked about Jerome Powell and the meetings, we do a lot of updates, obviously, on this. We always kind of joke around about how vague they usually are and how they hedge almost everything to the point where it's like almost pointless to even listen to them. This is by far the most clear he's ever been about economic data. You do wonder if like there's some like with the riff that he's had openly with Trump recently, if that has something to do with, with how clear he's being. The irony here a little bit, I would say, is it's interesting to me that the market's reacting so positively today based on him saying we're cutting rates, because why he's saying we're cutting rates is like there's some decent risks we're seeing in the economy, right? Like there's some irony in that.
I think the key is that they think inflation is going to be a one-time thing, but to explain why inflation every single month is sticking up a little bit by a little bit, he's saying it's a one-time thing that's going to come in stages, which is, I don't know what rabbit he's trying to pull out of this hat,
Yeah.
But it's like, we only expect prices to rise over 5%. But those 5% are not going to happen in a single month. They're going to happen a quarter here, half here, et cetera, until we reach to the 5. Where inflation is, we do not know how much it's going to be increasing by. It could be 5, 6, 7, and it'll carry onto each other. That is, he kind of set an upper limit to it, saying that it's a one-time thing happening, not all at once. right?
Got it.
So,
Yep.
in conclusion, here's what he said.
Wait, Cody's got something. I think he's got a question.
I was gonna say I do like how he explained that though, because I think in people's minds when they think about inflation, they think of almost in absolutes or like that things just jump up like one big jump at a time. But I don't think people realize that it does happen in small stages. Like you look back past, the last 10 years or so and you're like, man, inflation jumped up. And it's like in reality,
It was a slow burn.
the whole tide slowly came up. It wasn't like one big wave just came and,
It's so true. And it's a great point, Cody. And we've talked about this recently where there's a difference between inflation and just prices being increased again as a short-term or one-time thing because of, let's say, tariffs, like this kind of exterior shock to the system causing, yes, a rise in prices. That does not mean there's inflation. Those are two different things and often get confused. That's a really good point, Cody.
100%. It's the same point actually Jerome Powell said. It's like if we think that this one-time jump in inflation and price levels will become an inflationary pressure, we are here to tackle it. Like we're not gonna let expectations the anchor and like derail the economy. Like they are very careful not to repeat the mistakes of the 70s where they increased and then pause and then increased again and then pause and inflation went rampant. Okay,
Yeah.
last point, and I'm just gonna read exactly what he said. Putting these,
because you don't want to do work today. That's 100%. I get it.
I don't want to
totally get it.
I'm net neutral to the economy today. Putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to unemployment to the downside. A challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to the neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Boom. Mic drop,
Nobody would call that a mic drop other than you. You're the only one.
Dude, no, the whole stock market considered it a mic drop.
That's true. That is true. The market loved it.
You just have to put on the nerdy hat for a second.
Yeah,
and you'll really enjoy this. This is suspenseful. This is great plot. There's a Christian. Okay, yes. I'm going to stop. But you guys get the point.
Last time you compared it to the smell of a new car, I think, or buying a new house. I can't remember, or going shopping. But yeah, it feels like there's finally some alignment, at least with, I think, for whatever reason, I shouldn't say for whatever reason, I think the market obviously liked it today. It, like you said, responded super quickly. I can't, am I off base here by saying there's a little irony, especially when we talk about the VIX dropping off a cliff really quickly when he's literally saying there are some legitimate concerns in the economy that we need to address with lowering rates. Like that doesn't totally make sense to me, other than the market just liking that rates are finally going to start ticking down, which is great, generally good for asset prices.
100%, because the VIX is literally an indicator for the price of insurance. And with it dropping down, it means no one wants to buy insurance at this point.
Yeah. It is interesting. It'll be interesting as well. This is somewhat related, I think, directly to another topic, which was not like the main things we're going to talk about. But as we talk about the lowering of rates, we're getting a ton of questions right now, obviously around student loans, a ton, because of what's happening with interest kicking back on. A lot of people, now going from 5 years of not having to make payments to, we're seeing a lot of like multi-$1,000 payments per month. It's not a direct correlation, but there is hopefully some level of ripple effect if rates start to come down at the Fed funds rate of overall rates coming down. Again, it's never that direct, but it can have a ripple effect, not only with student loans, but I know another big question is mortgages. And that's going to be super interesting because there's just the housing market in general, like where prices are, even with rates where they're at. If rates start to come down on the mortgage side, like I was talking to a mortgage broker here in Utah, and he was saying, if you start to see it drop into like the 5% range, anywhere in that 5% range, the market's going to go wild. So it's going to be interesting to see how this has an impact on stuff like student loans and mortgages, if it does at all. Okay, that was a great summary from Jerome Powell and ChatGPT. Rabih, appreciate you being here as well. Any also, I love that we're matching shirts today. It's my favorite. We both got on and we're like, we're matching today.
I didn't get the memo.
I know. We should have sent you the memo, Cody. We were going with beige today, or tan. Any other final thoughts on that, Cody or Rabih, about the update from Jackson Hole?
Kind of just repeating what Rabih said, but I like how clear it was. Like you said, a lot of times it's not. I mean, most of the time it's not that clear. So I appreciate the clear explanation from them. And yeah, I'm just interested to see what happens going forward. Like you said, Rabih, there's a high probability that they're going to cut rates. And so, yeah, I'm just kind of excited to see what's going to happen.
And actually, now that you say that, Cody, there's a really good point in there of like, and Rob, you said it too, of like the clarity and that kind of, I think, surprising everybody. I think maybe it's that simple. Like the market reacted really well because it was just like, because he was so clear. It could be that simple, right? Of just people being like, okay, well, at least we know a direction, at least we know what's happening. And the market hates uncertainty. So that could be, it may not be even deeper than that.
100%.
I'm overanalyzing everything is what I do. Okay. Thank you, Rabih, for that breakdown from Jackson Hole. Cody, is 55 the new 65?
Yeah. So I was doing some research and kind of figuring out what to share on here today. And I came across a study that's on Business Insider that was very interesting and kind of surprising to me. So the study, it said that 94% of Gen Z wants to hit financial independence before 55, like before age 55. I feel like we're seeing that more and more. Like that in itself didn't surprise me as much. But what surprised me was this, and I'll read it so that I get it right. But it says that Gen Z, so that's ages 18 to 28, says that the ideal age for achieving financial independence is age 32. And I was like,
Get out of here.
Most people are just kind of
starting their careers,
like figuring out, they're just figuring out what they really want to do.
Yeah.
But then it says, as for when they'd like to actually hit that milestone, 94% said they want to be there no later than age 55.
Interesting.
It almost sounded like, I would love to stop working at age 32. I know it's not ideal and it probably won't happen, so I guess I'll settle for 85. Like it just,
like I would love to be done tomorrow, but yeah.
But even age 55, I mean, you think about our parents and grandparents, like that generation, it was a lot more of like you start in a career, you kind of climb the ladder, you work till age 65, and then you retire, right? There wasn't as much, switching careers and companies and things like that. And so what I thought was interesting is just how that mindset has shifted.
Yeah.
With Gen Z. Another question that I kind of thought about is that actually possible for most people? In a normal career, right? And so a lot of the study was talking about how there's a lot more side hustles going on. There's a lot more entrepreneurship, a lot more like investing in real estate and things like that to try and reach that, financial independence number by age 55. But I've been thinking about if you're not a business owner or you don't have some kind of crazy side hustle that makes a bunch of money, is it actually possible to retire at age 55 and have the funds necessary to live the life that you want to without really any restrictions?
Yeah.
So I kind of wanted to bring that to the table and get your thoughts. Is it really possible to do that?
Yeah.
If you don't, have a big business that you can sell or, have some other income.
Yep.
I don't know.
I think it's a super interesting topic, especially for dentistry, because of what we see all the time with dentists. I definitely have thoughts, but let's go to Rabih if you have an initial response.
Initial response, two actually. One is whether it is possible. I would say on a salary, probably if you really run a very tight ship, not having lifestyle creep follow up, aka you are spending 40K a year and you're spending 40K a year forever. I know it's a low number, but compared to like average wages in this country, right? If you can do that, probably you can get to a financial independence value of like 25 times your annual spending or 30 times your annual spending by 55. Like mathematically, there is a path, but it really requires a lot of work in terms of controlling your spending, right? If you just look at the spreadsheet. The other question, which is I'm very interested in and want to loop you in, Gen Z hope for 32, and if not 55. That is good to be ambitious, but do they have the behavioral habits that follow up that claim, or is it just a hope without converting it to a goal? I wonder whether Gen Zs save better, or they have anchored expectations, or they understand the long-term play that compounding needs. I don't know.
Oh, go ahead. Cody, you want to respond to that?
Oh yeah, yeah. It is. It is interesting to think about that. If someone wants to be financially independent at 32, investing isn't, like investing in an IRA or just your 401k, like that's not going to get you there by 32. You know what I mean? Like there's got to be something else that you can do, or like I said, have some
Yeah.
stock that you sell, or
Have rich parents. Yeah.
But yeah, right. Or I wonder if, you've got social media, you see all these people on TikTok that are like, I'm living the life that I want to live at 35 and like this is how I did it. I wonder if people are seeing more and more of that and they're like,
So
I don't
glad you brought this up,
like
Cody.
that's easy, I just have to
Yeah.
get a TikTok account and make a bunch of money. Yeah, I don't know if that plays into it at all, but
Yeah. Again, I'm really glad you brought this up. I think this is really pervasive, again, specifically in dentistry. There's a lot, I think, of different ways we could kind of take this discussion. But Cody, what you just said there at the end, I think is really worth hitting on for a minute, which is I feel like when stuff like when we talk about these like trends, right? And you're talking about like the different generations, right? We see this kind of the finger wagging of the older generations. By the way, me included on this is, an older guy now where I'm like, these kids don't get it. Like, I think it's really natural for an older person to be like, what is wrong with these younger generations, right? And I really do think it can create some tensions, like let's say within a dental office, older doc trying to partner with a young doc and transition out. Like that can I've seen this firsthand of creating some tension. But I can't help but think, and I want to get your guys' thoughts on this, that like this is a manifestation of the same underlying issue. It's just again expressed differently depending on the generation. Meaning, I think most of us just live life on autopilot. So like I think the older generations is just was assumed you work till 65 or whatever, or like even prior to retirement even being a thing, it was like you literally just worked till you died. Retirement's a relatively new concept, but I think the idea that like, oh yeah, you just work till social security age and then retire, like that was kind of an autopilot generational thing for the older generations. You just kind of did it. I kind of feel like it's the same thing now, just manifested differently. Now everyone just copies each other because of social media. Like, yeah, I want to be independent by the time I'm 35 or 40. It's like, have you even actually thought about what that means? And like the actual drivers of like why you want that. I don't think most people even have even answered that question, but I want to get your Rabih's ruminating on that
Yeah, I
comment. I
don't
want to
know.
hear.
It's a tough question because I like it's easy. Talk is cheap, right? I want to retire by this time. I want to do this by this year. But what are you doing differently in terms of action items? Like what if you want to retire much earlier and the rule of thumb is saving 15 to 20% of your paycheck, what is your savings rate at that point? Like let's get into the detail and see whether what you're talking about translates to action items that actually solves this mathematical problem. I don't know. Like we see people spending money on meme stocks and Pokemon cards and Labubus. Like
La Bobos, yeah.
it doesn't connect to me. Or very hefty vacations just for the Instagram post. Like the goal does not translate the behavior. And maybe there are outliers out there, but as a generation as a whole, I think it's the anchored expectations. No.
But I think exactly we're on the same page. I think that's exactly what I'm saying is like it's just become the new norm of like I should want to retire or be financially independent or retire at 50 or 40 or 45 or that's like the new thing. And by the way, I'm not saying there's anything wrong with that. If that's your true intention and there's meaningful like purpose behind it.
oh yeah, like if you can do that and retire to something not, a lot of people say want to retire, but you have to retire to something.
That's it.
If that, if at that age, 35, 40, you're like, I am financially able to retire to something that I love and I like have a passion for and I have a purpose, like that's awesome. Like that, like you've done it. Like that's great. So I
Can,
didn't
can,
be off, but
no, I love that, Cody, because you said exactly, like, it's an amazing point of there is a total difference in mindset of I'm retiring, I'm escaping something versus I'm retiring to something. Can I admit something really quick in front of you guys and all the people?
It's just it's a
There,
very safe space.
it's very safe. I can share my feelings, be vulnerable. There's some inner conflict for me around the word retirement. Like, just, I don't love it. I think it's such a misconception. We need to think of something else. I just think that it's not a complete enough. The concept of retirement to me is just not complete enough for us to like have that be the goal, in my opinion. I think it's more around like life transitions as opposed to like this holy grail of retirement. I just think it puts too much pressure on people. I think it's misunderstood. I think if you look at the actual data, we should do a whole podcast on this, but if you look at the actual data around people who retire in the traditional sense without a purpose, and took Cody to your point, they're not retiring to something, the levels of depression, the levels of divorce, early death, like it's stark. It's kind of crazy. And I'm not saying that your work has to be your sole purpose and meaning in life, but I do think you should be doing some work on that end of figuring out meaning in your work before you rush to escape it. Because I just don't know if the grass is always greener in that sense. So,
Yeah,
Rabih,
I agree.
yeah, what are your guys' thoughts on that?
you can go first, Robbie, then I'll say something if you had something that
No,
you would
I
like
agree.
to
It's
talk about.
Matt, you became vulnerable and you're opening an existential door over here. So welcome, Cody, to the
Yes,
first podcast where it goes off rails.
we never do that. We never get
We
philosophical,
never
go
do
off
that.
rails.
But it's this conundrum where I am stuck doing what I am doing in the economic machine and I absolutely hate it. But once I'm given the freedom, I'm lost and I don't know what to do. And it is as existentially agonizing as the first. So the answer is not going to be, oh, do I have the money to not do it? The answer is going to be something inwards, more inwards about what you do. Shout out to 2 dentist money summits where we try to capture this
We tried to
problem.
capture that. Yeah.
Yeah.
So true. Go ahead, Cody.
I was gonna say, you said the word transition, like a life transition. That's the same word that came to my mind when you were talking about, when you retire, a lot of people see that as kind of the holy grail. Then they retire and it's like, what do I do now? I think another way to think about it is it's almost like a career change in a way. Like you're changing your career from, whatever your job is, whether it's being a dentist or financial advisor, whatever it is. You just think like, what do I want to change my career to? And that could even be like my career now is to spend time with my kids and grandkids. You know what I mean? Like almost seeing it as more of a career transition than I'm just going to stop working. I feel like is a good way to look at it. Obviously
Yeah.
that's more of a mindset thing than, action item, but
But this is why, again, I do think it's an important conversation. And again, specifically in dentistry, because I can't even tell you how many times I've talked to a young dentist. I remember we've talked about this before. I think I mentioned it, I think on one of our podcasts, where I spoke with Ryan at an event in Utah a few years ago. And the host of our room, D4, and the topic, we were doing an all-day workshop. It was literally an 8-hour workshop on financial freedom and retirement. And he was like our host, right? So he was like helping us get everything set up and all that. And I was talking to him before, and it's like, how's school going? You're almost done, all this stuff. And he's like, man, I'm so excited about this topic that you guys are going to be talking about with retirement. And I'm like, dude, you're just starting your career. Like, what do you mean? Like, you're excited about talking about it? He's like, oh man, I can't wait to get out of dentistry. And I'm like, wait, you haven't even started. You haven't even started the race. And you're like, I can't wait till this thing's over. That to me is I'm not like calling anyone out. I'm just saying I can't help but observe a bigger issue or a different issue than a different problem than the one you're trying to solve. I think people are trying to solve a problem and they're not even asking the right question. Like, why am I starting a career that I can't wait to get out of? that is an inherent issue that has nothing to do with financial independence, in my opinion. And so that's why I think this discussion is really important. Is if, again, we hear this with dentists all the time. It's like, if you're just gung ho on becoming a real estate mogul, like, you don't need to go to dental school for that, So I just think this is something, there's some work to be done beyond like setting an age and being like, I got to be independent by this age. It's like, I think there's some pre-work to be done of why is that my mindset? What's really behind that? So again, Rabih, somehow we always do this where we get really philosophical. The other thing I wanted to hit really quick on this, though, something I mentioned earlier, and the reason I wanted to bring this up, because I'm seeing this right now with multiple of my clients, older clients who are getting ready to transition. I really do think, Cody, I'm really glad you brought this up, because this impacts dentists a lot. This generational gap and mindset shift, or gap between the older generation and younger generation, this is creating some pretty significant tension within practices where the older doc has this mindset of like, grind, you put in the work, I took this risk, I built this thing, and you're sitting here worried about work-life balance when you're 30 years old. Like, you should be putting in the freaking work. And I really do think this is a problem in dentistry. Like, I think this is becoming an issue. I don't know the solution to this, but I just wanted to highlight that with this topic specifically, that I think it's impacting individual practices across the country. You guys have thoughts or response to that?
I'm trying to clarify it. So it's affecting practices across the country because the new coming, associate who's taking over the practice has a different productivity level. Like, is the choice of choosing the work-life balance affecting productivity?
Yeah.
I would say no, just because now we live in a different age where productivity is more, service-based than it was work-labor-based.
Yeah. So here's where I'm seeing an impact in real time, in real life, with dentists, businesses, and lives specifically. So if you think about like an exit strategy for a dentist, there's really only so many options. And I think a lot of people out there know how we feel about, exiting to corporate and how the challenges that come from that and the trade-offs that you make there. But let's take corporate off the table. Another really traditional way to do this, especially if you're a dentist who's built up a large practice, is to do a kind of staged out transition to younger dentists, to your associates. So I see this all the time where a dentist, let's say they're in their 50s, 55, they're starting to think about exit, or maybe they're 50, whatever they are. Starting to think about exit. They have multiple associates. They're younger, and they're going to do a staged or tiered exit. So they're going to, associates are going to buy a piece. They're going to work together as partners over the next 5 to 10 years and do it in stages. Where this creates true tension, and again, I'm seeing this firsthand, multiple clients that I'm dealing with right now going through this process, where the owner doc, the older doc who's built the business, is feeling the pressure and wants to sell, right? Wants to sell and wants to find this exit plan and doesn't want to sell to corporate dentistry, but feels also like, well, these people I'm going to basically partner with for the next 5 to 10 years of my final stages don't have the same mindset, don't have the growth mindset, don't have the grind it out mindset, aren't worried about increasing their production, aren't worried about profit margins, don't fully understand what it means to be a partner. Like, because of just they're more worried about like striking a balance of life, which I'm not saying there's anything wrong with that. I'm just saying it creates tension within practices as these older docs are trying to transition out. And it's like, I'm either selling to a DSO or I'm potentially stuck partnering with people that we just have totally different mindsets on.
Go ahead, Cody.
Yeah, I was going to say, I can see how that's tough. And I don't really have a solution. I was thinking, is there a solution to that? I don't really have a solution that comes to mind, but that would be really hard, especially this practice owner that's built it from the ground up, like this is his career legacy, so to speak, and he's, want to make sure that he has the right exit for himself financially and so that the practice can keep going and continue to be successful. That's a tough spot to be in if you don't see eye to eye with your other partner. So kind of just piggybacking off what you're saying, but yeah, I don't know a solution to that, but I can see how that would be a problem that's coming up more.
I agree with you both that it is tough, but I am more hopeful because outside of dentistry, this is a problem with small businesses that is elsewhere, everywhere, and there's lots of research about it. We're not talking, the issue is not here with the philosophy or culture of work. It's about how you hire and your corporate governance, in a sense. The clearest example that comes to mind is the issue that happens with family business when the dad has 2 kids, right? And they want to give them the business, and probably the oldest one, who's, I don't know, in traditional more environments, they just want to give the business to the oldest kid, but that oldest kid is spoiled and does not have the same mentality to run the business, and they would want to give it to the younger kid. And how do you deal with the dynamics of that stuff? A parallel can be made with dental practices. You're hiring an associate, but they are high producing, but their mind is not that of a business owner. Then maybe even if they are the most senior associate and in the transition of the buy-in, they might be the ones who have the chance now to chip in, might not be the right person to have them become an equity owner, a partner, and maybe skip that person and move to the second one. So those are issues. And Matt, I know we could make a big webinar or a podcast about this, but there are corporate governance, learned experiences and case studies that can make this problem solvable. And it's not something that blocks your way and say, oh, this is an unsolved problem, let me just go to corporate to guarantee my productivity.
It's a great point, Rabih. And teaser, we are already working on an outline and talking about bringing in Christine Ewan to talk about this exact topic of like how to partner with associates and how to partner in general. It's a great point, and I think that is the solution. But there's a difference of dentists out there who are considering bringing on an associate that'll be potentially a partner in the future versus a dentist who finds themselves in this position with multiple associates where they haven't had this conversation or mindset or corporate governance, as you said. I totally agree across the board. In general, it is a solvable problem. This is just business. This is a business problem. I think overall, we've talked about this before, dentistry has to have private dentistry, which we very much empower and try to protect within the space and encourage people to focus on. It just requires a mindset shift. Because what you just described there, Rabih, is truly the mindset of like a CEO, of someone who's thinking about these things strategically long term. That's what dentists are going to have to start thinking about. As you bring on an associate, you got to think about, what's my strategy over the next 10 or 15 years with this person? Do they have the mindset or approach that I want as a future partner and transition kind of strategy, right? Are they going to help me facilitate that? So I think that is the solution. What are you smirking at, Rob? What are you smirking at?
No, I think we can come, like, a good transition to come full circle, because if you're really thinking as an CEO from the start, when you're starting the business, etc., this will actually be one of the good steps that will let you retire early. Back to Cody's question.
Yep.
This is what I wanted to tie it to.
Yeah, I love you. Look at you, landed that plane. You started off so lazy on this show, and then you couldn't help but bring in your unique insight and opinions, and I love that. That's a great point, and it really is full circle, and brings up the last little minor thing I wanted to mention on this is, Cody, you were saying earlier about side hustles and real estate and all this stuff. I do think that's another risk here that just is worth kind of hitting on really quickly, is the risk of distraction that is created by this mindset for people, especially, again, we'll stick with dentistry, how distracted dentists get when it comes to thinking the secret to their freedom financially is outside of dentistry. And it is not. Like, your secret to financial freedom, Rabih, is what you just said. Build a killer business that's super profitable, that you've already strategically thought of firsthand of how does it run without me chairside. Like, that is the clearest path to financial freedom and fulfillment. And I don't think enough dentists are actually entering the career thinking that. So the risk of distraction is so pervasive. And it's all, I think, comes from what you're saying, Cody, with this, like, I got to get out of here by 32, which is just laughable, or 50 or 45.
Yeah. Something to add to that. I wonder if, and I don't want to spend too much time on this topic or overdo it, but I think maybe why a lot of these people, a lot of the Gen Z generation, is thinking, I want to retire so much earlier, like I want to be financially independent by 32, or I want to retire by 55, is maybe because, do you think they're just worried about not having a good work-life balance? So they think, if I'm not working at all, then I'm free. Instead of, if I can create like a great work-life balance, then I can work even longer if I want to, right? Like if I'm capable to, and still have a great life and still live the life that I want to live. I wonder if maybe there's just some nerves there of like, if I'm working, I won't be able to live the life that I want.
Yeah.
So
Yeah, it could be. I tend to, and this could be totally wrong, and maybe too cynical or negative, could be. Um, I just don't think enough people have. I don't think many people have even thought about it that far. I just think they're just regurgitating things they see online, and they don't even. I bet if you really challenge most people out there, if they said, "I want to retire," quote unquote, retire at 45 or 40 or 42 or 50, I bet they haven't thought beyond just those words. I don't even know if they know what that actually means.
yeah, I'd agree with that.
Rabih, any final words on this?
I love it.
I'm glad you brought it up, Cody. I think it's a great topic. Let's close this out. I think this will be a quick one, but this is kind of an add-on to, I think, was it Rabih? Was it? I have lost track of all of this. This last week for me has been one of the longest weeks of my life, so I don't even know what day it is. We talked about private investing in 401ks last week.
Last week.
And yeah, last week. So I saw this, and I think this is a good kind of add-on to that. I thought this is super interesting. And it's maybe something people don't really know about private investing. But the question being, are you smart enough to invest in private assets? There are some lawmakers who are now proposing a knowledge test to allow investors to actually invest or hold private assets. And so to kind of give some framework here, or kind of give people some context, right now to invest in private assets, it has nothing to do with knowledge or ability. It has all to do with basically financial tests or benchmarks. It's called an accredited investor. And to be an accredited investor, you have to, it's either an income milestone or benchmark, or it is a net worth milestone or benchmark. So for income, to be an accredited investor, you have to have $200,000 AGI as a single filer, or $300,000 as a joint filer. And if you don't meet that criteria, then you can meet the net worth criteria, which is $1 million net worth outside of your personal residence. What's interesting about this, as I was going through this, and Rabih, you already knew this, weird. You just knew it off the top of your head, but I did not know this. They have not raised this criteria since 1980s, which was shocking to me and also a little scary, because especially in the dental space, if we think about, let's just be honest, in the dental space, like, to say $300,000 as a married filing jointly couple, like, that's pretty typical for a dentist. Like, that doesn't put you in like a top tier of dentistry. That's pretty normal. And to say that you are now immediately considered like eligible to invest in riskier assets that require a lot more understanding and knowledge and research, that's a little bit scary that they haven't updated that since the 80s. I'm not sure why. Rabih, do you have any rationale as to, is that just pure happenstance and
You know
laziness by
how
the government?
efficient our bureaucratic government is.
That's true. Yes. Yeah, that's true. Yeah, because I mean, if you add this to the fact that, again, we talked about last week how they're now trying to get access to the 401k assets, $12 trillion in 401k assets, like, and you can invest your 401k in private investments, and the accredited investor test is not that stringent. That's a little bit worrisome, even more worrisome than you heard my thoughts last week, Rabih. You heard how much I did not like that rule. So what lawmakers are now proposing, there are some lawmakers proposing that we actually add or do away with the financial tests, like as far as net worth or income, that criteria, and actually make it more of a literacy test. So a knowledge-based test that you'd have to pass in order to be able to invest in private assets. I want to give a couple of stats here, but before, I'll just say it should be both, in my opinion. They should inflation adjust the financial criteria to today, in my opinion, and add a financial literacy test in order to do this. But what are your guys' thoughts on just that initial proposal and all this?
Can I be skeptical?
Please. I love when you're skeptical.
Like, is this test going to be something similar to the driving test, written test that you take before you can jump behind the wheel because it actually imposes danger on others? Or is it going to be similar to those suitability ones where brokers who want you to trade more and it's not in your advantage, just to check off a compliance box, ask you, oh, how many years of experience do you have doing this? How many years of experience do you do this? What's your level of knowledge? And once you click these boxes without reading them, you have access to everything. I am very skeptical on the quality of that test. And given that this law that you were very vague about how you feel about it last week, seems to be coming from the side of businesses that are trying to get a bigger piece of the pie, I do not think that test is going to correct that course.
Yeah, I would agree. Cody, any thoughts on that?
I was just thinking about how you're saying that the requirement, like the net worth requirement, hasn't changed since the 80s. I feel like it should increase. And part of the reason is if someone has a higher net worth, it almost feels like they have some funds that they can keep safe. And then there's some that if they lose it, it's okay, if that makes sense. Because private investments are a little bit, they can be a lot riskier. And so
And less regulated.
And so if someone with a smaller net worth can now, pass this exam and invest all of their funds into a private investment and they lose everything, they've lost everything. Versus someone with a higher net worth, they can lose some and they're still okay. And so I'm just piggybacking off of what you were saying earlier about dentist income and things like that. If someone has a lower income or a smaller net worth, it just makes sense that they might not have access to these because their losses affect them more versus someone that has a higher net worth.
Totally. And that was the, I think, original congressional intent in the 90s when they came out with the credit investor laws. The problem is they just haven't updated them since the 1980s. I think that's the problem. And I know this is a bit of a slippery slope of like, how much should the government be involved in regulating people's personal choice? Like, I know this can get political and philosophical, which we've already done plenty of that. I just think they need to update the criteria based on the congressional intent of the original laws. Because if you think about $1 million net worth outside of personal residence and that income, that's a lot of dentists who would be considered like pretty typical dentists. So like, to your point, Cody, let's say a dentist just has a pretty solid practice but they have pretty minimal liquidity and maybe like a 401k and they're mid-career. Like, to say $1 million net worth outside of your primary residence, like that's not that difficult to do for a mid-career dentist, but it by no means means that I would look at their balance sheet and be like, yeah, man, you should be going out and attacking these private deals in oil and gas or whatever it is. So it's a good point. At the very least, they need to be updating that. I am also skeptical, Rabih, based on last week's discussion we had around who's really driving this ship and who are they actually doing this for. It's really difficult to say it's for protecting the end investor. It'd be hard to say that. Last thing I wanted to say on this, Rabih, before I do, any thoughts? No, I want to give you, so to your point, Rabih, it is tricky to create one of these tests and how they're going to do it and what's the motivation and all that. But I thought it was interesting. There's a FINRA Investor Education Foundation. They have a 7-question financial knowledge quiz with questions about fundamental concepts, including interest rates, inflation, debt, and risk. So I think the premise they're talking about is like the lawmakers are proposing like an actual test to be not not a suitability test, but like what you were saying earlier with the driving test. Like, do you actually understand how this works? But they did 25,000 adults took this quiz as part of a broader financial capability study in 4% of the respondents could answer all 7 questions correctly, and less than half answered at least 4. So, and that's been about the same numbers since 2021, since the study's been going on. So I think that just goes to show, like, if they were to implement a test like this and raise the requirements, the financial criteria, I think you would limit the amount of people that could actually have access to investments like this. So interesting, remains to be seen. Rabih, I'll send you the quiz, see if you can answer all 7. I have a feeling
if I don't answer all
it.
7, I'll submit my resignation immediately.
There you go. I'll send you the link. We'll see if you can handle it. Okay, Cody, Rabih, any final words on this or any other segment we've hit so far? Feel good?
Cody more often.
I know, Cody, what a topic, man.
Just
So
fun to be
good.
on here. Thanks for having
I
me.
know. We're so glad that you could be here. So, if you're out there listening and you're thinking, wow, this was valuable, we hope so. We hope it was valuable and entertaining to listen to and educational. If that's the case and you think there's a dentist out there that should hear it, please share the episode. We want to try to spread the word as much as possible. Education is the foundation of everything we do. And we're truly just trying to add value to the dental space and hopefully have some fun along the way. So please share the episode. If you want to talk to us, we're here to talk to you as well. You can go to dentistadvisors.com, click on the book free consultation button, and we would be happy to chat with you, hear what's going on in your life, hear your story, and see how we can help. For now, Cody, Rabih, thanks for being here and sharing your wisdom. Everyone, thanks for listening. That was our 2 cents. Till next weekend. Bye bye.